Heranba IPO, a short-term pop or a long-term compounder. One of the leading agro-chemical players in India, Heranba Industries Limited, has launched its IPO today to raise 625 crore rupees. The issue closes on 25th Feb. With an upper price band of 627 rupees per equity share, the offer also includes fresh issue of equity shares worth 60 crore rupees. Objective of raising money through fresh issue of shares in primary market includes proceeds for the working capital requirements. This Vapi-based crop protection chemical manufacturer has a dominance in a prominent set of insecticides called Pyrethroids. China is major export destination for it and constitutes 36% of export sales, with Shanghai Agri-Care Chemical being among the key clients. So, is Heranba a good option to invest? Well, let's first talk about valuation and financials. HIL appears reasonably priced at EBITDA of 13 times, given its return ratios and margin profile. There's zero long-term borrowings and company has a dominant position in pyrethroid market. Coming to financials, operating margin stands at 16%, with the company making a profit of 66 crore rupees in the first half of FY21. The company had a profit of 98 crore rupees for the financial year 20. Its revenue stands at 618 crore rupees for the first half of FY21 as against 951 crore rupees for the entire FY20. Its import dependency on raw materials is relatively limited at 20% of the requirement. Though the revenue figures are not mind-boggling, does the company has any advantages for being one of the leading manufacturer of pyrethroids? So what are pyrethroids? Pyrethroids are synthetic chemical compounds that are procured from Chrysanthemum cinerarifolium flowers. With the phasing out of organophosphate insecticides like chlorpyrifos and diazine, pyrethroids became the predominant class of insecticides. These are cost-effective alternatives to conventionally used insecticides and exhibit biodegradable properties. Also, they are relatively less poisonous for mammals or birds, owing to which they are used for killing bugs and flying insects in small quantities. Nowadays, pyrethroids are used both outdoors and indoors to control insects such as ants, fleas, termites and bedbugs. Currently, company has around 20% market share in the domestic pyrethroids market and faces competition from Tagros, Dhanuka, insecticides, Syngenta and Sumitomo. Future plans and capacity utilization. Heranba's Unit 3 at Sarigam Vapi, with an installed capacity of 5,000 ton, runs at 58% utilization, leaving a wide scope for further near-term growth. The company acquired land parcel of 55,000 square meters on lease basis from GIDC at Sarigam, out of which only 22,300 square meters has been presently used for Unit 3. There is another land parcel measuring around 34,600 square meters at Saika, and the company has applied for the environmental clearance for the proposed expansion of manufacturing activities at Saika. So the company is well placed to raise its manufacturing capacity. The China factor. More than half of the global demand for pyrethroids comes from China, after importing intermediates from India, which is used to produce pyrethroid. However, China's adoption of the Blue Sky program has led to the shutdown of several chemical plants. This in turn is expected to result in higher volumes of pyrethroids being exported out of India. Future markets. As various technical grades will be going off patent in the near future, this may lead to demand for the generic versions in the regulated markets of the USA and Europe. Partly to meet this, company has established a new research and development facility at Unit 3 in the last quarter. The new research and development facility is already focusing on new molecules, of which 2 products are fungicides. 2 are herbicides and 1 is an insecticide for exclusive sale in the European and the USA markets. All these factors weighs in favor of the company. being the manufacturer of a chemical that has almost a monopolistic use as a pesticide for crops with a good market share and a capacity to expand, makes Heranba an enviable option to buy and hold for a long term. But does that mean that Heranba is operating without any risk? It has some risks, but they are not that prominent enough to affect the company's performance. One of the key risks for the agrochemical sector in recent times have been changing regulatory landscape and dependency on China. In case of regulatory setup, based on Anupam Verma Committee of India for regulation or ban of various pesticides, company has recently ceased the manufacturing of the 3 to 4 molecules. And as for China, there's no indication that the country will stop guzzling pesticides and chemicals and take the organic route.